futures trader generally prefer to sort of trade in the 30-minute time frame using market profile indicators. But what we're going to be discussing is a very similar indicator to market profile known as volume profile. So market profile actually defines when the market traded at a specific price level, whereas volume profile shows you the accumulation throughout the trading session, throughout the trading day. But I'm going to break down the volume profile as detailed as I can go into, but use the chat room to ask questions. Okay, so in order to apply volume profile, there are a few variations. Now, the first thing I must say that on TradingView, the volume profile indicator is not standard. It's not on the free subscription or free membership with TradingView. But what I would say is, if you want to try out volume profile, you could do the 30-day. You could do the 30-day free trial. And then it's your choice thereafter if you want to continue with the subscription or not. But it's your choice. We're not affiliated. AlphaChain is not affiliated with TradingView, so it is up to you. But yes, this volume profile indicator, it does require a subscription. It's something that you can do on a 30-day free trial. Now, there are quite a few versions in regards to volume profile. I'll talk about each one of those, and then we can also then progress into a specific one that I tend to use. I'm not too sure what the session volume HD is. I don't know, is this a TV that they're selling, HD version? Okay, but anyway, well, a fixed range. Let's start with a fixed range. And depending on the markets that you're looking at, I'm looking at Apple. Let's just go with the most popular sort of, company, well known. So a fixed range is you define how much price action you want to review in regards to the profile. Okay, so you could say you're going to start on the most recent candle and you want to take it far back as, let's just say, with a prior trend. Let's go as far back as probably, let's go from the lows, right? So if I just take it back as far as that, and this is what I'm going to see. Okay, so this is almost one cycle of market taking place here, reaching these lows, accumulation phase, then you see trend phase, then you see a distribution phase, and then we're seeing potentially a downtrend occurring, right? Downtrend occurring here. So if I just put that into a little bit of order, okay, so let's have a look at the annotation tools that I can use here. Draw, okay, draw's fine, yeah. So we've taken our fixed range. You can see sort of where the range begins. So it begins from this point, it ends at this point, most recent price action over here. Yeah, you can see sort of what it's highlighting as well in this range that we've defined. But just from a visual standpoint, I mean, you could pretty much assume, you could pretty much see this is where you have an accumulation phase occurring. Accumulation is where price action ranges at the lows. It ranges at the lows. Can everyone hear me well? Can everyone hear me loud and clearly? Is anyone else having listening issues? Yes, sorted. Okay, great. Yeah, no problem. Yeah, so this is where you tend to see a lot of the smart money come in and buy. Institutions, big block traders, and smart money just pretty much accumulate assets at these lows here. Okay. And then you see sort of the trend phase, and this is sort of your uptrend phase. Okay, this is your bull trend phase occurring. You have a strong bullish drive occurring in market prices. Yeah, and then it reaches to an overbought region, shall we say, and you have your distribution stage. Okay, so you have this is only your distribution stage. So you can assume this is where profit taken is occurring. Okay, this is where it's taking place, and then this could potentially be the start of your downtrend. Okay, so you have your accumulation, you have your uptrend or bull phase, you have your distribution, and then you have your downtrend or bear phase. Okay, now this is part of Dow theory. If you don't know about Dow theory, it's covered within the course program, or you could do a Google search and you can sort of quickly identify what Dow theory is when it talks about these phases. Well, one of the benefits of volume profile, it does quickly outline this for me. Okay, so you can see where the bulk of price action occurred, where the accumulation phase and distribution phase was in these regions, right? So you got this large node there, and you got a series of these nodes over here. Okay, so all of these, this is where the bulk of price action occurred in this region here. Now, the difference between a volume indicator and volume profile. Is volume indicators are below price action. Okay, it's below price action as a histogram, and what it's doing is outlining the amount of volume transacted over a period of time, whether that's a 5-minute time frame or the 30-minute time frame we're on currently, and so on. In fact, I should actually let me just go back to the mouse. Let's go to the indicator, vol. And let's just add the volume there. Okay, so there we go. There's the volume indicator at the bottom there. Right? Now this all show me the amount of transactions occurring over a time period. Now I'm not too fussed about that. Great, yeah, over a time period that's fine. Yeah, but what I want to know is what price levels were there substantial amounts of volume occurring. Okay, and that's what this tells me. And generally, when that occurs, that's where you start to see institutions, smart money, big block traders really starting to accumulate or distribute on that particular asset, with that particular asset. Okay, and that's what volume profile brings in. It gives that, should we say, a 3D element to it. Okay, so price action is one, tick volume is another, but volume profile gives you another dimension to how markets are taking place, right? What's taking place in the markets, right? Gives that extra layer of technicals that you could analyze and really see where the institutions are stepping in. Now, this is from a much larger picture. We've taken a 30-minute time frame, but we're viewing data going back all the way sort of, mid-February to now. Okay, so there's a lot of, price action information occurring at this current moment. Okay, and that's based on my analysis. Now, this is based on my analysis. This is based on how I've defined my fixed range. Okay, so let's clear all drawings, and we don't explained the difference between the two, volume profile and general sort of tick volume. Now, ideally, can I just drag this out of the way? Yeah, perfect. Now, that was your fixed range. That's not one that I'm too interested in. Okay, so back to sort of volume profile. Then you have visible range. Okay, now this is now applied to price action, applied to the price on the right hand side. Okay, so you can see where you have your price, you have your volume profile allocated. And all this is doing is, as I zoom in and out, it's considering all of this price action, all the price action that we can see, right? So if I make adjustments and so on. Okay, so if I now just focus on this price action, again, that's where the focus is. Okay, so it's going to show me whatever I see within my window. So whether you do a fixed version, whether you do a fixed range that you identify and you put in your, your 2 levels, or you put in your visible range and you just zoom in and out to how much information you need, that's your choice. Okay, these are the 2 that I don't often use, because a lot of the time I would only recommend these 2 if you're more of a swing trader and a position trader. Okay, so if you're trading the longer term view. But if you're trading day to day, I would probably, let's remove indicators, right? I'll probably sort of remove that and look to apply, let's go with the session volume. I'm not too bothered, they're probably both the same, but let's go with session volume. This is what I tend to often apply. Okay, now it's going to tell me price action based on the range. Okay, it's telling me price, it's telling me what's happened with each and every single session. And a session means it's opening and closing sort of the day-to-day session. Okay, so as a day trader, I'm more focused with what occurs throughout that trading session, throughout the trading day. Now, we might want to now zoom in a little bit. You can use a 30-minute time frame. You could be on a lower time frame. We'll just wait for that to load. And that's going to show me with each session what's occurring. Now, I'm just going to quickly zoom into one of those sessions, right? So the most recent session that we're in, or we will be in, markets have not opened, do you remember? So this was yesterday's session. Now, if we bring the settings, now for this volume profile, it's important that we highlight what we see here, okay? Well, the value area, it's defining this from this point to that point, where you see sort of the colors clearly. Yeah, so this orange and this blue, where you see this clearly in comparison to this movement here. What it's showing us, 70% of the traded volume. 70% of the traded volume is being displayed. okay, where there's the most amount of volume occurring in that range. So it's showing me 70% of that range. And it's up to you if you want to only see 70%. Okay, it's up to you if you only want to see the 70%. I don't mind. You know, I tend to view all. So if you wanted to view all, so you just pretty much change this to 100%. You want to see 100% of what's occurring. Okay, so that should show you all. Okay, there you go. So that's all of that, right? Now, row size means, you know, in this row here, how much of, you know, how wide it's going to be, right? So how much of it's going to be contained within that current price action. Okay, again, it's up to you if you want to, you know, a larger amount, the size of these historicals or not. Okay, so it's showing sort of you've gone from 24 to 50. If you go to 100, you're seeing quite a lot of these nodes. These are known as nodes. Each one is known as a node. Okay, so that's the sort of the key part there. It's also showing you up and down volume or total volume. Okay, so it can show you total volume occurring or up and down volume, so bullish, bearish volume occurring. Okay, and if you want to make adjustments to that, so the up value, sort of bullish, will be the blue. That's orange. You could use sort of, you know, go with up value is green, and you could do that as red. You know, in line with your candlesticks. And this red line we're seeing over here, this is point of control. So this is where you see the vast amount of volume occurring, okay? And that's seen as the point of control. That's seen where, you know, a vast amount of sort of trading has taken place. So when price action is around this region, there could be a large move that occurs from that point onwards, okay? So you have your point of control. You have your developing VA, value area. Now, because we have defined 100%, that's the sort of the top and the bottom of this value area. But yeah, again, that's not too focus on that. You've got your developing point of control. So if there's another sort of point of control developing somewhere in this region over here, that's also showing that. And I think what's more important to what I'm looking to do is, if we come back to input, extend POC to the right. Now, what often will happen is you'll see previous levels of point of control being tested again. And you can pretty much see that being done, right? So, you know, this was May the 4th trading session. We saw a large gap taking place and then a continuation to the downside. Okay, so we see, let me just zoom out. So a significant sort of sell-off, a large gap occurring, strong bullish drive into this region, into the support region around 126.80-85, and it just hovers sideways, right? And just stays in this region here. Next day we had a gap up, that becomes your high. So the high is around the 130.50, close to 130.50, slight retracement, a new sort of, you know, almost a retest back to the high, and then it comes lower. And the following day, on the 6th of May, so 2 days later, it goes on to sort of test prior lows, test those previous point of control sort of levels. And then we had a rally occurring. Okay, so we had a rally occurring. We had a gap up. So on the next session, we gapped way above this, pulled all the way back. So it gaps up, pulls all the way back down, and then rallies from that point onwards. Okay, and then, yeah, I mean, you can see where we are now. That's exactly where we are. It's back at those previous levels of point of control. Now, you know, if for example, you have a situation as this, where you've got a point of control which has not been tested or broken through before, and that will be displayed all the way to the right-hand side, and that's known as a naked POC, which means that at some point we may have a retest back to this region here. Okay, now where you have these levels, they can be identified as support and resistance levels. Okay, these can be seen as your support and resistance levels, where large amounts of accumulation distribution has occurred. Institutions have been potentially trading in these regions here. Yeah. Where there isn't any of these point of controls, that's where you may see there's very thin liquidity, and generally price action will just move in one direction. Okay, so you'll often see where there's a lot of liquidity, right? Let's have a okay, yeah, so you know that there's a lot of liquidity in this region here. We gap lower, there's no liquidity, there's no point of control anywhere in this region over here, maybe only up to sort of this region here from a prior level. And yes, I mean, because of liquidity, you'll just see markets just moving lower and lower very quickly. You'll see sharp moves occurring where there's very little sort of trading action occurring in certain regions. Because the next area where this price actually could stall is where there is large amounts of accumulation occurring, right? And that will be sort of at the next level point of C, POC. So yeah, this is what sort of, you'll be looking to identify when you're looking at volume profile. Now, it's important you just don't trade this on its own, okay? You need to be trading this in line with other confluence indicators that you can apply with this, okay? Look at this point of control. So all the way through, again, sort of broke through, back above, and then once it really breaks through this region here, breaks through these key levels of support, it's now driven much lower, okay? And that's what we're looking for, potentially the next low. So if we're looking at, now we spoke about this being accumulation, this being an uptrend, bull trend, this being distribution, this potentially being the start of the downtrend. Now we've got to break this low, right? This is a pivotal low over here. The next significant point of control will probably be back down to sort of this region here. We had a lot of price action occurring here, and it hasn't come back to test this region here. This is known as a naked volume profile. This goes in line with sort of being the 120 handle. Okay, so this going in line with the 120 handle. We're on the 50-minute time frame. The pre-market's already down to 124. So there's already sort of a bear incentive in pre-market. But again, let's just, you still need to wait to the market open. You still need to wait to the market open in regards to that. But yeah, there's more sort of downside when you look at the volume profile. This is how you would want to trade or use volume profile in addition to other indicators like identifying your own support resistance. Fibonacci will be sort of a good place to look into, especially when you're trading a trending market, not a ranging market.